Okay, hi there, guys. Just let me know if you can hear me okay, and we'll get stuck into it. Who have we got in today? Any smiling faces today, or all right? Let's just get started. Welcome to Trade Setup and live stream. We're now the 21st of October, so getting on. The grand finals are done, both NRL and AFL. So when they're done, and things are starting to wind down a bit coming into Christmas. So um, interesting in these markets lately. So we'll go through today. I just want to talk about, well, the main topic I want to go over is just noticing weakness, as it said in the headlines, noticing weakness and trying to notice it early and what sort of price actions playing out so you can sort of get a handle on it, what you're looking for, not getting caught up to jump into something that's potentially getting set up for a fall, because there's fine details, and I think it's about time we get into some finer details, especially with your technicals, um, of what could be going on, especially at this time. What's happening with the ASX? I mean, the ASX is down 16 at the moment, which is not. It was expected to be down about 15 points. The US was down on Friday night, going to the weekend. A few concerns about China's growth, which China's numbers notoriously come out in line all the time. They don't seem to come out way out of whack. Um, so that sort of crimped the markets going into the weekend. Then you had numbers out in US manufacturing. There's still concerns that manufacturing is not picking up. Now, if trade wars don't kick off, if they don't come to some sort of agreement, then that's going to continue to linger and cap any sort of growth. And everyone's obviously still concerned that consumers in the US keep supporting the US or the market. Brexit over the weekend. I don't know if anyone completely understands. I'm not understanding what was talked about these letters and things, but yeah, letters out from Boris Johnson. He did what he had to do. He come out. So they come out on Thursday night, EU and England, with a deal, pen to paper, come out with some sort of agreement, and that was a bit of a surprise, and people got a bit excited. Then over the weekend, he's trying to push through, um, just basically getting it done, an extension. So I don't know. I'm not exactly sure on the details, but I think Parliament. I think he just wants to, by the 31st of October when it's due, which is in a few days, basically a week or so, he wants out of the EU with or without a deal still. So his prerequisite, or his idea, is just to be out, as far as I know, or as far as I understand. And he did come up with a deal, but then there's still lingering problems with the deal getting through. I think there's problems in Scotland, and Ireland with the borders, Northern Ireland, which I don't think they sorted out. It sounds like they have, but I don't think they've completely sorted out the issues. So there's going to be, you'd expect Parliament to want the extension also, and then to keep working on a complete deal, whereas the EU just sort of sitting there going, okay, you guys figure it out. So there's still problems, even though there was a bit of positivity through Thursday, Friday. So I think that's capped Europe, obviously, and they were waiting on the vote um, over the weekend, which I think is to delay. So that's all capping the market. Um, Caused obviously a bit of a cap for us today. No one's going to get out of hand. I wouldn't expect on the upside when the US is down and Europe's got their issues. Nothing's really getting worked out. We haven't heard too much about the phase one deal of late, apart from I think China are saying they want it. And I think they're still talking up they want another meeting. So they still have some issues to work out. Um, Maybe it's just all about delaying tactics pretty much across the board. With a deal, yeah, we're going to do a deal, but we're not going to give you anything just yet, and we're going to try and delay. That's just what it seems like to me, anyway. I think sooner or later the market will cotton onto it, and people will slowly stop putting on risk on the bounces because they turn around and come straight back down again. Um, and probably more and more, if you load it up, you'd be starting to ease out, just taking some risk off the table, because I think any sort of rallies may be capped. I mean, you can read anything online. You can read bearish comments, you can read bullish comments. So it's just, take your pick. And that's why I thought it was good idea just to talk about price action, and when you're seeing things, trying to cotton onto it earlier rather than later, of weaker price action and stronger price action. Should you put your money in, or should you hold off, and that sort of thing. So any questions as we go, feel free to put them out, and then we'll just answer them as we go. And also feel free, what we'll do, I'll probably spend about 15 or so minutes on this, and we'll get into more on some stocks and ideas. We've got a couple we've got one that ticked off on Friday, which is good. Get us back in there. I think there's another couple that potentially tick off soon. But again, it seems to be, it's that idea where retail opens a market, and your pros will close it. And they did close it on the stock and kicked it off, which was good on Friday. I think they triggered it and held it up into the close, which is nice, but it just washed out on the open today, which is what you probably get. A few people that would have jumped in, obviously free on the fear, looking over the weekend, go, oh, let's bail, and then it's turned around and popped back up again. So it's just, the markets are choppy. So don't be disheartened if you're getting things that's getting choppy a bit, because you're not the only one. It's not the only stock that it's happening to. So a lot of them are kicking off with some good setups and not going on with it like they would, probably 6 months or a while ago. So it's really hard, with our style of trying to let it run. It makes it hard, because the ones that you probably look at it and think we should just cut it, because markets, the price action's looking a bit weaker, but we just stick to our guns, and we're getting chopped around a bit more than normal, which is a bit of a shame. So yeah, we'll go over now, and then put any stocks that you want to have a bit of a look at, chuck them into the comments, and then we'll go through those. So firstly, I'll just open up the chart. What I wanted to talk about is, a lot of it is got to do with, anyone that's into their technicals, there's market structure. So that's the big thing for me, is what's happening with the market structure. Does it look like it's going up? Does it look like it's going down? So when we're talking about market structure and price action, we're talking about your swing levels, your higher lows, what's happening here. Anchors getting broken. What are we getting? Lower highs, all that sort of thing. So this is market structure or price action of a stock. So that shows you the zones where you want to get active, where you would like to get involved into the market, where is your best bet. You don't really want to buy on highs, obviously. You don't want to buy when it's extended and then find it pulls back, and then you could have got a better price, or it rolls over. You buy up here and it starts bouncing. You go, okay, it's coming back, and then it rolls over and it's a deeper correction. Then you got some losses to potentially deal with. So there's rhyme and reason why you want to know about market structure and about price action and what could be playing out, because you're trying to project of what you're studying or what you learn with regards to price action. And you've got to, you can chuck into that not just the price action, but you support it with, well, I do anyway, support it with volume. I use stochastics, bit of momentum indicators to get an idea of what could potentially play out going forward, and try to base my assessment on that, on the market structures. Ideally, what I'm always looking at first and foremost. Next, for trying to assess the candles, so candlestick analysis is, anyone that gets right into it, and I think that's where you start drilling down and you're really trying to refine your edge into the market and refine how you read the market. Obviously, a lot of people don't. I know there's a lot of fundamentals that will sit there and just buy purely off fundamentals, because fundamentals rule, which is good. But I think when it comes down to trading and really starting to increase your profitability, I think you need a few more things, a few more tools added to your repertoire to try to refine those entries, refine your exits also, take advantage of a good move, when people are buying, when are they not buying, when is a solid sort of price action, when you get finding some good support. Is there a bigger buyer, is a smaller buyer? What can you sort of read into that analysis, and whether or not, okay, if I analyze it quite good, and I'm looking at my price action, I'm looking at probably candles as well, looking at the volume coming through, does that all support my thesis that it's going to go a lot higher, and then jump in, and then really just looking for your entry. So what I wanted to go over now is less to do with the actual price action and more to do with, legs what's happening in sort of that minute detail to try to get a bit of a heads up. Is it worth just sticking aside and waiting? Is it worth jumping in now? Because I think it's looking strong. And I think it's probably an opportune time too, considering the overall markets. We'll look at the ASX and then we'll just go through a couple. I've got 3 stocks in mind, just to go through what I'm looking at, and then we'll chat about that. Any questions, fire them off to me, and then I mean, if you watch this later on, by the way, and you got a question on what we talk about, just shoot us an email, support@tradesetup.com.au, and we'll go through those. I can always email you back what I was talking about, or what, probably giving you a better understanding of what I was talking about. If that makes sense. That was a bit random, but so that's what we're talking about. We're talking price action. When we're talking candles, might be better if I can do it. And you got obviously green bullish candles, and then you've got the red, and you're looking at things like rejection. What kind of candle is it? Is it finishing? Is it opening, testing lows, and then finishing on its highs? And that goes into what we're talking about with, g'day Pete, what we're talking about with price action, and what we're talking about with the pros. Sorry, your retail opens, your pros close. So in that statement, what you'll find is a lot of, say, funds, or what do they call them? Your prop traders and your bigger traders with more volume to do. They might have a set volume. And this is the way I understand it anyway. They have a set volume that need to get out during the day, whether it's getting in or getting out, whether they're buying or whether they're selling. Okay, and it doesn't happen all in one hit. If we're doing say 1,000 shares and the liquidity is quite high, with us, for example, you've got 5, or say a $10 stock, you might be doing 1,000, 2,000 shares. It's 10 or 20 grand, whether it's margin or not. But if you're doing, say, straight shares, you've got that certain liquidity to get through. You might be able to get it through in the one offer on that price, or you might just be able to sit on the bid and someone's whacks you for the whole lot in one hit. But if you've got quite a few, and so that's just one price level. But if you've got quite a bit of volume, you're building a position, or you're trying to get through a bit of volume, you won't just hit it out at the offer or take out the next few levels, because one, it's quite stupid. If you're going to take out 3 or 4 cents and you're trying to get a big chunk of something on, you're trying to buy into the market and the market's looking quite bullish, you could trigger a whole lot of buyers jumping from the sidelines and chase it higher. Then you're left standing with half an order done, or a quarter of your position size that you wanted to get on, and you have to buy at a lot higher prices because they have that sort of mandate where a certain amount of volume during that day, and it's about managing that position or managing that entry or exit at that stage. So that's why you get these sorts of candles. They might start off, nibble away, the bulk of the volume's done sort of near that low, and then they start pushing it up into the close, get a good close, but on the close they get the final amount of volume, or it maybe isn't a match, but they get it done towards the close. So that's your daily candle, and that's when you can get your bullish price action. It can be the same on the flip side, but that's why you want to see, if you've got a bullish candle like that and you've got no volume, you've got to be careful, because that could just be, okay, let's take one step back. So what I'm trying to explain is reading into that price action for that 1 day candle, or it could be on any time frame, 30-minute candle, half an hour, 1 hour candle, 1 minute candle, whatever you want to look at. Is it action truly bullish, or is it a bit of a setup? It's just broken through a high, and the next day it comes and gets smashed back down again, or it's just up. You're looking at that candle, that's great, but it's up into a resistance zone. It's just falling short. Next day, again, comes screaming back down again because the liquidity comes in on the other side. So you've got to analyze all these sorts of things, but with regards to that candle, trying to understand what was happening during the day. And volume, I think, for me, especially with one particular candle, comes in very important, because if you can see it, all of a sudden a spike in the volume, and you got this kind of move, or this kind of day where it opens, tests the lows, and finishes on its highs, that's a bullish candle, because you got volume that's supporting it also. G'day, Gino. So there's a few things you want to piece together when you're looking at individual candles, and then with the candle itself, depending on what zone. I mean, if you're up towards this high and you get this kind of green candle, it could be, you could read that differently. Even if there's a bit of volume, a bit of volume comes in, it could be a capitulation candle, whereas it's spiked up the next day, it gets rolls over because it's extended. You've got to put all these So the idea is what you're trying to do with price structure and your candles and your volume and your bits and pieces. You're trying to piece it together to get a picture of whether or not you want to be in. If this sorts of thing happens, in these zones, your particular buy zones where it's looking good and your stochastics are looking like they're rising, um, coming from overbought to oversold and they're starting to lift again. It looks like it's a prime zone where it's a good swing level. And so all these things, and then if you get a candle like that, okay, that's a completely different story than it would be potentially, especially, imagine if you got it just here, for instance, the market's pulled back, started to rally, and then you've got a big green candle. The market could be overbought at this stage too. You've got a green candle with maybe it's lacking the volume you want to see, and you look at it going, hang on a sec, it's not particularly a bullish candle in the context of what's happening on the price action. Okay, so there's all, these candles they made up, you've got to obviously, I don't know what you call them, spinning top, where that's more indecisiveness. The market's pressed down, popped up, and comes straight back down to finish where it opened. That means when it's coming into the close, it's getting sold back down again, or reverse, it's popped up all the way back down, it's getting bought up into the close. So you just got to look at your intraday action to try to figure out what is it. Potentially, can I make that a bullish scenario or a bearish scenario? What would I allocate to that type of candle? Then you've got candles that I'm trying to think. They might. Oh, that's not very good, is it? It might be green, but they've rejected a key level, and it's open, spiked up into a key level, and comes straight back down. So it's closed the bottom half of a candle. So all these sorts of things, you can read into individual candles what the sentiment could be for that day. But you've got to. I know people that look at candles religiously, which is great. But if you don't put it in the context of what's happening with your price action, also, I think you can come unstuck, or you're not building a solid picture, I feel. And the same token, if you're just looking at price action and what's happening, I look at particular structures, so you've got this type of thing, so you've got the pullback and then you've got your high low, that's my typical sort of style. I don't need to exactly with my style look at candles, but what I can do is miss something that just goes up, pull back straight up again. I'm looking for my higher low. Whereas if I looked at a candle style, I might look at a candle setup as such. 3 green candles in a row, bang, you buy on the third day, your stop's below. There's, you might have bought it in here, or you buy it just when it starts to rise. You got volume with it. So there's different ways to enter a market. So I've been working personally on looking at candles for a while now, just working um, on improving my area or improving my game in that area, because I feel that for me, what I'm finding, this is not playing out all the time in the market. I'm completely right on the stock that takes off. I'm not on it because I didn't get my setup. So it's worth going, okay, have I got a different style of setup that I can use? Can I analyze the candles better to refine my entry, or to get a bit of a heads up that things are strong and there's a turning point? When the market's coming down, the volumes are coming down, prices coming down, the candles are going to act slightly different. I think you get a series of candles they can chop around a bit on the way down, and when it starts to expand, if you get a candle like that with volume, yeah, that could be allocated as a bullish move. Okay, so I'll go through. I just want to touch on a couple of examples. This is one we're just looking at now. If I can get that move, I think it's worthwhile. You look at the candles themselves. There wasn't much here, but then you got this big expansion. So what you've got is the price action. Let me just take that back a bit. So into this move, the market's choppy. You can see that your flat line on the volume, it doesn't really do anything. The market's gone down, but what you've got in this zone, when we're talking price action, I'll just start from scratch. Yeah, I think, Pete, you've got to. I think, say here, for example, let me just go back to the volume. Come on, come on, don't be silly. You've got volume that's not really doing too much. It has kicked up, and the market's pulled back. All right, then you've got the market sort of edging lower, not a lot of volume, not much action happening there. So if you're looking at it at this stage, coming into, what's that? Oh, now I've got to figure out what date that is. So it's about start of 2019, so end of last year. about here. Not much is happening. I hope I've got, just transition that. No, that's fine. You can see the whole chart, yep. Not much is happening, no volume pickup. Then you've got this lift, which you've got to take notice of that. Again, not a lot of volume that's kicked it off, but that's a bit of a change in sentiment. You've got a couple of good candles. Then the price consolidates through around 10 cents, but then it lifts. Okay, again, you don't have a massive change in the volume coming through, which is okay to me. I probably wouldn't have traded that. I don't know if we did. We traded bot a while ago. I can't remember where, when. Might have been a few years ago now. But either way, that's okay. That's bullish price action. But just because it's come up to here doesn't mean, say you're buying these couple of days, you buy when it pulls back a bit and you're looking for it to take off. Now you don't, just here, you don't technically have any, you've got your stochastics coming in line, but you don't really have any volume supporting it. So there's nothing to say that that was just going to take off. And what we saw is the market actually chop around, and it spent the next, about 3.5 months going sideways. And what it did is retest 10 cents quite a few times. And you can see the lower highs were still coming into the action. Well, probably wouldn't draw it there. Lower highs were still coming in. The market was still being pressured a bit from the sellers. But then all of a sudden, about here, you've got a really pick up in volume. Now, it's a tough one because the market can take off. And you can see the volume. Everything starts to work, but you just don't get that setup. So what I was looking at, if I was looking at this then, I would have been sitting there going, okay, ideally, I'm waiting for pop up. You've got the volume, say at this stage, you've got that lift. Then I might be looking for that, and I could buy. I've got my entry, I've got my risk level. But at the moment, any one of those candles you bought, any one of those days, you'd have to risk based off intraday action, not daily. I mean, you could base it off an individual candle, for example, as in it's gone up. You buy the next day on the open, and you've got your risk below the previous day's low. And that may have worked. I'm just going to check a couple of candles. Yeah, look, that probably would work because none of these would really break the low any of these days. What I like to do is obviously I like to get some sort of setup, some sort of action like that, or maybe a bit of a washout, and then I can buy on the rise when I think it's washed out enough people, and then see if I can get a kick on from there. But for me, it's about trying to allocate where am I going to put my risk. But the good thing is you've got the market here has lifted. It's quite well, and you got volume. Volume's a big heads up that something's happening. You don't know what, and it's taken out this key high as well. So with regards to price action, this is a high level. So if I just want to clean this up and start again. So if we come in at this stage, for instance, we've got a few things that have happened. So you've got a higher levels holding as opposed to down here. So buyers are holding a higher level. And you can see with the stochastics gone from overbought to oversold, overbought, oversold. So it's starting to oscillate, but instead of pushing down to a new level, back down to retest the old lows, it's holding a new level. So every time it goes oversold, it's at a new level, meaning that that's starting to become the line in the sand for a move up. All right, so you've got that's played out. You've got the high's just been broken. The previous high back from, well, what's that? That's from, well, it's probably mid last year. Yeah, mid last year. So the high's just been broken here. And then you've got this pullback. So here you'd be looking for that as a potential entry. You've got to, and the reason when it's so extended, you just want to make sure that you're not going to buy. I mean, I'd always be looking for a setup. I want to be proven that I'm on the right side of the market's going to start lifting. I'm not going to get caught out when it continues to head south. If it does go back into pullback mode, and there hasn't been really any pullback there, so it's a sign of strength. You've got the markets taken off. First pullback, it was getting soaked up at around 17 cents from 10. So that's probably the top third of this move up. So that's another good sign. You've got, then when you start digging down on the candles, you've got a couple of, if we just drill down on that a bit more. So make that a little bit smaller. There you go. So when you got this lift here, it expanded higher. The next day it sold off. Yeah, opened, sold down. Okay, that's not so good. So you want to just give it some time. You'll be watching this. The next day, it sort of opened up, tried to go again through, was it 20 and a half? it couldn't. It finished on its low. So the next couple of days, a bit of a heads up, there's potentially some bearish action coming, or there's some sellers starting to flow into the market or into this stock, into BOT. The day after that, when you've got here, it was an indecisive day. So it's showing that also there's a bit of selling coming in, but there's not a lot. So people are starting to think, okay, what's going on? What's happening here? Do I really want to sell it? If I bought it down here, I'm not really going to close it out because there's not anything that's killing me. And then from there, you'd start to analyze, are we going to hold up at these? Are we going to consolidate this high? And if you consolidate that high after a strong move up with volume coming in, so you know that the volume's really picked up. If they were going to come back out of the market, if it was just a dud, a bit of a dump, or was it pump and dump, as in it's got pumped up and they dump into it, then it shouldn't be holding these highs, and you should see the volume start to pick up. But instead, or the volume keep kicking up. Instead, the volume's easing off, the market's pulling back. It just shows you that, okay, maybe we've got to a point here that buyers are not, that it gets to a point where it gets a bit stretched, and the buyers will just go, oh, that's it, it's gone too far, I'm going to sit and wait for a pullback. And if I miss it, I miss it, so be it. Rather than, the fear of missing out, the FOMO, where people just chase it high because they don't want to miss out, they think it's going to the moon, they get caught up buying on the highs, goes into a pullback, they either sit stuck holding it for a long time, or they just got this massive loss because that was the high. It falls over, retraces, goes into a holding pattern for the next year or so, and you're doing nothing. So that's what you ideally don't want to do, and that's why you get the market will sooner or later run out of people willing to buy it. And then what happens then? The next obvious thing is that there's sellers, there's a whole lot of buyers that are built up that don't want to give up their gains, and that's why you start getting price action. Sellers start coming in, but then after, say, these first three red candles, or even the fourth red candle, you're looking at it going, well, you've got to start asking yourself, how many sellers are going to come in? How many sellers are willing to book their profit? Or sorry, how many of those buyers that built up through here with the volume are willing to get out, close out, and book their profit and call it a day? And what would happen if it consolidates those high? Could it have another leg of run up, which it could easily do? Generally, the first run up doesn't capture everyone, but there's going to be a second run up. So if you're looking to get it, if that's sort of your business trading plan, I don't want to just jump in willy-nilly, but if there's run up and it pulls back and it shows signs of strength, I'm willing to get in, because I generally think 9 times out of 10 there's a second run up. It's going to keep going, and that might get overextended, or that might just really kick off hard. Okay, I didn't get the low, but I'm taking major chunks out of the market, and that could be just the way you trade, which is pretty much what I'd be looking for. So there you get here, you can take it to the next day, see the little pickup in volume, and we've got a green candle. That's a good sign. It's a good sign that, okay, buyers are stepping in. They're not willing to wait anymore. Maybe something good is on the cards. We don't know what the news flow is. We don't know what's potentially coming out. What do people know that we don't? But what we can read into it, there's buyers around. There's buyers sitting around on the sidelines that are waiting to come in, and they're getting a bit eager because we've got the lift in volume then, and we got a day it did reject the highs, that 20 mark, but it closed. It closed with a gain for the day. Next day, a bit more indecision. Then you've got another gain, but each day is holding a slightly higher level. Lows here, high low, high low, high low on a daily basis, and then you've got this day. So you could have easily bought, if you can see this as an entry setup. If I draw this up, you'll see what I'm talking about. You've got a pump up, pull back, up, pull back, and expansion. So you could have just bought it through 20. That way you know exactly where your risk is. So that is a legitimate entry setup. You probably come under fire a bit for a couple of days, but then it eventually took off, went to 28. You're probably sitting on about 40% gain at that stage. And then up to, it's up to you how you manage your risk. I don't know exactly. I think it's gone a bit higher after that, didn't it? 28, that was about the highs, then it started chopping around. You probably would have got, maybe took a partial there, or you're still holding it, who knows. Does that make sense there, guys? Just what I'm trying to talk about by taking into account what's happening with those candles. What's the volume doing? I mean, yeah, you've got it's overbought, but that's why I think it's important to know what's happening on individual candles and really looking at the volume and piecing together with the price action, so you don't get caught saying, "Oh, it's overbought," and you're sticking to your traditional indicators, because these indicators, yeah, they can go from overbought to oversold and then roll over. They can just keep going up, down, up, down. But there's times when the market's bullish, it stays overbought like that, and you could miss out if you're looking at just, okay, I don't want to buy because this is overbought. There's times when or maybe that weekly. Let's just go back to take a step back. Was it here? Yeah, it was somewhere in here. So the weekly wasn't overbought. So there's a lot of room to move on the upside with the weekly. Well, actually it was, wasn't it? It was just up here. So either way, what I'm trying to say is don't get too caught up in just indicators. I think first and foremost, you're looking at price action. You're looking at who would be caught. We know that the market had got through this previous high, okay, and it really took off. We know that after those couple of red days, it's pulling back, okay. We're getting our pullback that we want to look for. We're getting the pullback, but where's it going to go to? I have to be on guard now that it doesn't get that secondary leg up, which I expect, and I'm not on board that either. And I'll really just be kicking myself. So that's sort of the way I would be analyzing that. And I think that was a good example of some candles along with price action. I mean, if we just take one step forward, what we're getting here, the price action, just look at this move. You know, that's all part of one move now. One move up off the lows. It's consolidating really probably above the top 40% of that move. And the longer the move up, probably the longer you would expect to see that consolidation. And it is going through that phase of consolidating the highs, like we saw on a minor scale just back in here in June. Similar sort of scenario. It's held 20. It started to pop up, rejected the highs, pulled back. Buyers are stepping in a bit early. It's starting to look like it's supporting 22, 23. The volume is steady. So you've got it here. The volume, it started to kick off. There's probably volume chasing it. And then it has a bit of a pullback. The volume, you can see here, is starting to come. Let's just take volume in here, starting to fade as we go to pullback. And then a little green candle supported with a bit extra volume, a bit above average. And then again, we got, what's it, a green? That's a red candle, bit of a sell-off here. But if we start to get market ticking up and it gets through 26 and we start to see that volume start to come in, I think that's a good sign that this could be, it's getting close to the highs. But closer it gets, it could be just building for that breakout, potentially through 29, through 30 and above. And that's, just go back. I mean, it's got legs. It's got a lot of legs to it potentially. And this has been higher before, and I know it was years ago, but it could have a lot of legs to it. Not a massive, it's some good volume coming through. I think the average volume of the last 14 days has been about 700,000. I just did an alert on this. Now it's around a mil. We're only halfway through the day, so if there's some volume comes at the end of the day, just watch this one for a bit of a break, especially through 26. So I'm personally looking for a pop through 26, maybe a pullback to build a higher low, because it can still do some work below 28. And if we get that, get a higher low, it could buy on another flush up, and then just see if we get some supporting volume, can drive that up and through 30. So that was one. Again, a similar thing here. As soon as you get that volume kickoff, this is on Capricorn Metals, CMM. It's only a smallie. I mean, the ones I'm looking at the moment are just smallies, but price action, if we go back to the weekly, did nothing much through 2018. Not a lot of volume. Again, at about June last year, sorry, this year, I think it was about June, July, it kicked off. So it didn't do too much, but it was starting to lift. And you got these little pickup in volume. That was in March, a bit more volume in April. And you can see this from the weekly. It's chopping around, and it's had a serious base put in over many years around 2 cents. Okay, it lifted right up to about 17 cents, pulled back. This is a key longer term major higher low at around 6 cents. I know we're talking longer term, but this is all part of your structure analysis or your market structure. So we're looking for this higher low. What we always do is take from low to high, measure that low to high, project where it could go to. It was probably somewhere around 20 off this, if this is going to be the low. And then on the right hand side, we're looking for confirmation that we're holding, shorter term higher lows, and we're going to buy into it on the premise that we're going to project this initial leg up. Does that make sense? So you've gone from 1 cent to, what's that high? 17, say, 16-cent move. Take that from about 5 cents, makes it 21. Is that right? 21. So that's where you would be looking to for this leg to expand up. Okay, and it all makes sense. You've got a higher low. So that's the way I'll be looking at using the weekly, going, okay, we're on the rise on the weekly. Okay, I've got to go back down to my daily. Let's just check out for an entry. Okay, this is the first sign that something's happening. Start of June, volume picks up, market takes off, consolidates slightly below the high, and then you just got to pick your entry from there. And this could have been a zone. I mean, it's fiddly kind of zone, but you just got to analyze, are you willing to say buy on the rise of that high through 15.5 cents, will you stop a few cents away, really small risk for the potential this just keeps going, or you're going to wait for a deeper correction, more of a complex correction of that. It's all up to the way you look at it, but the fact that when it doesn't quite, you got this first red candle, it gets bought up the very following day, a couple of days, and it consolidates a few red candles of sideways action. I'll just drill that in. That's probably not where I want. I want it just here, don't I? I'm talking here when you do nothing, but you hold that level around 15. It's showing you that buyers are holding it. Buyers are soaking it up. You've got a bit of volume come through here on that positive day, but it didn't get too far. So, okay, the volume was down the next couple of red days. So anytime that following days are red, the candles, it's a bit of a weak day, but the volume's not there. It's just showing that this could potentially have some legs. I mean, if it gets knocked about, if that is the same volume in this market, it's a candle like that here, and it comes screaming back down, you might have to reassess it and go, oh, look. So we've said this before, if it's holding a high and there's not a lot of volume, it means the buyers are staying in, the bids are staying in. And whoever's selling is just selling to the bids, basically. Okay, but the bids are not disappearing, the buyers are not disappearing, they're happy to stay there, and they're happy to wait for that pullback. Or they're happy to wait to get filled, I guess, on the bid, or 1 cent below that current price, or wherever it is. But when you get the market expanding lower, it's more, and say that was on that similar volume for this day, you didn't have much, but say that expanded lower, you've got to look at all these things and go, hang on a sec, there's buyers that just disappeared. For why have they disappeared? Okay, not a lot of volume, but that candle's big that day. Somebody wanted out, as in they're not waiting for someone to come to them at 15. They're looking to pay up and get out. They might have bought it below 9. You don't know where they bought it. They might have bought it right up at 16. They're getting a bit nervous and they're willing to get out and just take that loss, consolidate that loss, but they want it done by the end of the day in a way. And that's why if they're going to have to chase it, if they're going to have to pay up or, to get out, the market could start expanding lower. And buyers might just be stepping aside going, look, I'm not happy to buy up here. I want a deeper correction. I want to retest to 12 at least, or potentially a bit lower. Then I'll start to edge in. But all these sorts of things you can just read into a candle, and using your volume, especially after you get some volume start to come into the market. So this, when it starts to come in, you should be perking up a bit, looking at that, going, oh, look, buyers are starting to come in. We know that by volume. There's more action, and the price is pressed high. A couple of good days, bit of a flush out on that red candle on the 8th of July. Volume is backed off a bit. Next day, it did kick up. It did pop up again, but it was a narrow range day and easing volume. So maybe you'd be sitting there waiting, going, oh, let's just see if this has, because it could easily, on this day, could have flushed out those highs, turn around and roll over for a deeper correction to test 12, like we were thinking. But instead, it doesn't do too much. You get these sorts of days, you go, oh, that's it. I've waited long enough. It's so near the high. If I bought on a break of the high of 15.5 and we get a bit of volume ticking, which it did start to pick up, it started to pick up here on that day. It breaks that high. I know where my risk is going to be. It's going to be around the 14 cent mark. I buy through 15.5. I buy at 16 even. My risk is there. It's only, what did I say, 2 cents. Not a hell of a lot. And after that day is finished, it's gone straight through. A bit extra volume. Things are looking good. It's looking to continue on up. And then we're just reassessing our risk as we go from there. And as we might have got cleaned out here, that was probably that pullback. Maybe you just need, if it starts to grind up, sooner or later people are going to want to take some profits, and then you get that bit of a tip over, it starts to go. But either way, you can see how we're just trying to read in what actions happen by day with the candles to try to get a heads up. Are we going to have to jump in because this is going to go higher? What's happening with the volume? What's happening with the candles? And each individual candle's got a story, as well as the price action's got a story. There's one other I just wanted to show you. Can't remember where I was looking. But this price action for me, it's just quite obvious it's heading higher. You've got major price action here is, just say we've got that leg there. That's once you start breaking down, that's all part of your contractive price action. That's a big clean out longer term. So you've got expansion, contraction. You've got expansion up, and at the moment we're going into contraction, but I'm starting to think this is the end of it. We've done that. We've taken out these lows down to $1.35 thereabouts. So off the highs of $1.95, that's a decent correction. It's put some volume back on the sidelines. You can see here, here. So it started to rally just in here when it was going in expansion. And then there's a few that's getting cleaned out. So you've got the lower high coming to play here. Whoops. Lower high here, pressing down. The volume's picked up through there. We don't know whether that's going to be a deeper correction. We've had two legs up. What's going to happen from there? So at that stage, you can understand, but it's still, the difference is what we want to look at, say on the pullbacks too. It's interesting to note how hard it pulls back. I haven't got an example of when it pulls back quite hard, but you know what I mean. When the market goes up, gets a lot, and it comes a really deep correction. So it's that 1/3 to 2/3. So if this is the leg up, 1/3 to 2/3, it sticks around that top third, strong market. Somewhere in the middle, around 50% retracement, give or take. Was it 30 to 60? Yeah, it's not so good because sellers are getting out and there's no buyers. So when you get that kind of reaction that comes down hard, there's a lack of buyers and people want out. It's as simple as that. But if it's the top third, yeah, the seller's coming in, and you might see that in the volume, you might see it in the stochastics, but buyers are willing to buy it at that high level. They're not waiting for that deeper correction. They're impatient. They might know something we don't, all that sort of stuff. But they're happy to buy it in the top third. When it comes down to the bottom third, you've got to think twice about it. You've got to look at it going, well, hang on a second. Do I really want to take? And that's where, if I see this kind of action, I want to see it prove itself a bit better. I want to see that base put in. I want to see some different price action before I start looking to buy it. So I want to give it time. I don't want to get time to hold some higher levels. I don't want to get caught deep correction. You start to buy it on the rise, and then it rolls over and builds a lower high. You get cleaned up. You either get stopped out. You're holding this loss in your books. All these sorts of things. So that's what I'm looking at. But yeah, this is when you look at this. You've got the expansion higher, and it was all a good move higher. Shallow retracement, good move higher. Next to no retracement, expansion higher. Then all of a sudden, when it does roll over, not much happens. It starts to get a bit choppy. So that's not a bad sign. When you get in choppy, it's all in context, still in context, this first leg up, then that's good. I find that good. And I'm looking for this secondary move, and I'm looking for somewhere where I can enter when it's going back on the rise, and I'm anticipating this leg. Does that make sense? From low to high, the same as this. Let's just do, I'm anticipating a repeat of that leg. And I'm looking, well, you can't see it, but I'm looking, it could be up near 240 or so, give or take. Does that make sense? And I'm looking to, I think that's enough consolidation, or that's enough of a pullback, contraction. It's cleaned out enough buyers, late buyers, maybe not anyone the first leg up, but definitely in the second leg up. And it looks like it's set and ready to go again. All right. And if we go down to the weekly, that looks quite good. I think that's a good clean out there. And we've had, like we say, markets pressed up, pulled back, tried to go again, has to have a deeper correction. And that's all part of that deeper correction. Now, this could be just resetting to go again and taking out the highs of $1.90, and off she goes. All right. So any questions there, guys? That's just sort of what I wanted to go through. It's and if you're looking in terms of the candles, there's two things I think with price action. God, this is getting a bit messy now. With regards to price action, if the market expands and you think you want to see strength, you want to see this kind of price action like this on the way back, but still that's your leg up, still within context of the leg up. So it's just a contractive phase. And then you're obviously looking for something. And so that's your ideal price action. So you're going to try to assess what's happening. And I think we're in this phase. We could potentially build in this phase just in here of what's that, VHT. So you're trying to assess that. And that's not so much candle analysis. That's more price action. And in each individual candle, you see that it's expanding lower. You can see on those couple of red candles just in here. Then it gets soaked up pretty quickly. Gets into a new low, gets soaked straight back up again. This come down quite hard, bounce quite hard. Straight back down again, okay, and we get through the lows through whatever level that was, 140, gets soaked back up again. Does that make sense? So you can look at those individual candles. You can see the expansion on the downside. There's sellers that there's people want to get out for whatever reason, but there's also buyers willing to soak it up. All right, so any questions there before? So just put up some, if you want to look at some shares, whack them in. Otherwise, I could just go on about, I could go on about this forever. I'm just looking to see where we're at. That's what I want to see, UWL. I want to see that continue. So for me, this is much the same. This is one we got in on Friday, for anyone that doesn't know. UWL. But that's had one, it's one big leg up. Then you start the price action that starts, okay, we come off the highs, and that was a good correction. And you can see you can break that one correction down in a couple of moves. 1, 2. Okay, so there's 2 moves down. I love seeing that, especially when it's holding up sort of that 1/3 move. It's just a good sign that, yeah, you know that sellers are going to come out when you start to get up to these high levels. So let's just take one step back there. We start to get up these high levels. You know that the seller's going to, well, there's buyers are going to lock in some gains and just take a step back and just wait. Just how many, we're trying to assess how many sellers are willing to jump in, how many sellers are going to bail, how many buyers are going to bail. Is it going to be a deep correction? Is this the high for the next year? We don't know. But what we saw from there is you got those sort of 2 legs. If we go back to pink now, then the market just started holding, and this is all some longer term correction high. Then this move here, we popped up, and that's a good sign. It's a good sign of strength in my eyes. And then you again, 1, 2. So it's the same in this 1, 2 action before we start finding a base. So if we can assume that that is signaling that we're going to get a high low here, we should be looking to buy on the rise. And that's why we bought through here. We've got that breakdown. We potentially got our high low, and that's sort of my price action I'm looking for. Okay, we're buying here. This hasn't played out yet, but if that's the case, we should be attacking 170, and we might have enough oomph after this consolidation through here that we're going to start lifting and go through $1.90. IFN will do. So does that make sense on UWL? So it's a bit choppy, as you probably expect, but it is, we're in front now. It's at 153. I think it's trading 154. So if this continues on and we can get to 170, we might be able to book a gain on that, book something, see if it gets to test up to 190, which would be great because it's lifting, and just see what happens from there. But I think that price action was quite handy too, just assessing that. Good expansion on Friday, and that was like we're saying, it opened straight up from the open, closed on its highs, good sign. Wasn't so good. It was a bit of a flush today, as you would expect. Now, if the market was expecting to open up 20 or 30 points today, I don't think we would have got that flush on the open. The fact that we were expecting the market, and the market did open down about 20 points on the ASX, remember retail open, they probably got a bit nervous, bailed out, sold out, and it's been soaked up. So that's a good sign that the fact that we're back at 154 on UWL, just have to see if we can continue on. So that was that one. Let's look at 2 here, IFN. So the one thing I see here, straight off the bat, I mean, the price action, we've got to go, let's take a step back to the weekly. That price action is quite good. All right, so we forget about what's happened here. The market's come off a base, see the volume picking up, as we press into highs. Volume's easing off a bit. The average, which is the pink line, is coming down a bit. But the overall price action on the weekly, to me, this is your leg up. We're consolidating, we're contracting that leg. You can see a bit of a pop up, a bit of a leg down. So that contraction, the problem I'm seeing is quite a deep move. So IFN's had that leg up, which you could say from 20 up to $1.20. So a dollar rally in that move. Now we're already given up, touching down to these lows, about 80 cents of that, which is your bottom third of that move. So we've contracted all the way back down again, which to me, I would prefer to have liked that held up and then start to lift off here and consolidate like that and then go. If I was going to buy it, I don't care if I have to give up. I don't find, well, let's buy it down here. It's cheap. Who's to say it doesn't get cheaper? But when you get a price action that's looking like it's going up and you're buying on the rise, we don't know where it's going to. So, the sky's the limits. Whereas here, the market can go to zero. I mean, I'm not saying it will, but I don't mind giving up. I guess what I'm saying is if we can hold that top thirds of that leg up, that's a sign of strength for me, even above 50%. If it doesn't retrace more than about 30% of the original leg up, that to me is a sign of strength. That means that someone's accumulating for higher prices, or there's people are viewing this as going much higher than say $1.20. It could go to $5 longer term, and they're willing to get in now because your risk reward is quite good. It's still quite good. When you have a deeper correction, it means whoever bought it for whatever reason they bought it first, they're either getting squeezed out. Imagine if they bought it above $1.10, they're still sitting at 70 cents. You'd have to be sitting there thinking, oh, so what's happening here? We're getting a bit extended on the weekly. We're down at 70. Last time we extended up here, we sold off. We took out the lows. So is this same thing going to happen? We're going to sell off and take out 40 and come all the way back down to 20 cents. We don't know that yet. So looking at this chart, what I would be looking at is the early stages on the longer term of potentially, I'll be looking at something like this. So that's contraction. We've just popped out. I don't think on the weekly we may have just yet. I think some heat needs to come out of this move. So this is now the move up that we're focused on. And what's happening in that move up? Can we say that it's getting extended? Or is it going to continue on? Does this make sense, Gino? So this, I think, is the bigger move we've got to focus on. And we're using the daily charts just to figure out where we want to put our entry. But I think that's your leg up, that's your contraction, and potentially we're looking for a leg up, maybe straight up to $1.20 or even above. All right, you've got these inside levels, which you might be a bit of concern, but you don't have to worry about that until it gets up towards there. Because either way, if we have a good risk reward on this, we want to have 3 to 1 before it even gets to 105. That inside level, let alone if it gets to 120 and above. So what we're looking at now, we're anticipating, we've had original leg up. We've gone from expansion, we've gone into contraction over the period of probably a few years, isn't it? 1, 2, 3 years. 3 years it's contracted. And we're potentially coming up and out of contraction and we're going into expansion again. So if we're buying from a weekly, where we could be getting more confident that we're buying on the rise with this move. And it's just going down to the daily to see really where do we want to enter, what's going on the daily, to say, should we just jump in now and have a massive, a big stop on this one, or should we wait because we can anticipate a bit of a pullback? So from the daily, first thing you're just focusing on this leg. There you go. So we've got this leg up until this green day, which was Friday, Thursday, Wednesday. The market pressed through there. Not a bad candle, but this is what we're saying of just looking at the candle. We've got a couple of green candles, but the volume change wasn't that much at all. We'll drill in a bit more. So we've got a first green day. Okay, it finished on its high, bit of volume, but it was below the average. The next day was above the average, but it wasn't anything significant. It wasn't well above the average. So from there, it broke through. What it's done is flushed out. It's quite clear. If you're looking at it at this stage, before that, and if you're looking at it in here, you're quite clear. You've got this kind of traditional pattern, a flag, whatever you want to call it, and you know that there's going to be buy stops above that. You just know it. So what I'm always ideally looking for some sort of inside setup so I can front run essentially that. So at least if I'm wrong, I get some, I guess, some money in the bag before I have to potentially get out or minimize my losses or break even or whatever. But I like to see patterns like that and be able to look for an opportunity to front run it. In essence, this could have been a bit of a front run. If you can see this break up through that level, it didn't go out. You turn around, you may have got stopped out here on that pullback. You may still be in, but you're front running it from 66 cents, anticipating that's going to break eventually through 69, which it did on that Wednesday last week. It did pop up through, but the next 3 days have been straight back down again. So that's the last 3 candles have probably sapped what I think is a strong market. It's just taken some heat out of that. And if you put that in conjunction with that weekly, don't forget, we're stretched on the weekly, so, and the volume's dying off a bit. We could be going into, this weekly is stretched up here, and that was a bit of a flush. So there would have been people that are looking at the weekly going, I don't want to buy it just yet. And if anyone's not looking at the weekly going, yeah, that's a great setup. Oh, whoops, that's not where I was. Where am I? If you go into the daily, go, good setup, I buy on the break, I got my stop here, and they could be the ones that you get. It's just basically a trap. The trap was set, they popped up, turn around and get squeezed back out again. The market has a deeper correction, resets. The weekly starts playing out like we expect. Deeper correction, 55 or 60, starts to hold. Then we potentially get to set up on the daily for that lift. And then we know that I think there's going to be a much better trade on our hands. Does that make sense? So I wouldn't look at that price action purely because of that green candle flushed out. The next couple of days have been down. If that was strong and that was a legitimate breakout after this leg up, I would have expected that to continue. Even that one day is down. The next day you had an indecisive day. This candle here was indecisive. We saw it spinning top, whatever you want to call it. I would have expected that to lift. Now, because it didn't, today has just been, we're down 3.5%, nearly 4% today. I wouldn't be buying this. I'd be just waiting. And I think this latest few days is leading me to believe that the weekly is going to play out. It is extended on the weekly, and we've set the trap. Traders have got trapped in here, potentially going to get squeezed out with a push through 63 or so. Squeeze back out, stopped out. Now, if you didn't, you're going to have to sit on potentially a big bit of a loss. It could chop around here and hold and set up again, then so be it. But at the moment, I wouldn't be too confident just on that one. Okay, ALU, we'll do that. We'll do PET, PET, your PET then. ALU, that to me is essentially just consolidating up here. And the fact that this is that pullback. I don't like seeing this move here because it's gone. Strength should mean a bit of a pullback, go again, bit of a pullback, go again. That Dow theory. Instead, that's pretty much 100% retracement of this leg up. Okay, the market's gone up, straight back down over a couple of days. It has bounced off there, retested, but when you retest it the second time, this is a really good point, I think. I just want to draw this up so you can see what I'm talking about. Remember I said the pullback. So the move, this is the move that's got our attention, okay? That pullback, we shouldn't have seen that. And after sort of up, down, up, down, up, down, this kind of price action, and it bang, it gives it all up in one foul swoop. That's not what we want to see, okay? Then it started, and it's basically done the same thing. You're getting the market drifting up until we get to the high, and it's essentially a proven double top. As soon as it gets through that level there at 36, was it 36 bucks? Proven double top. 1, 2, we've broken this anchor to this leg up through here, and we're on the way down. We've got a double top. So that leads me to believe we're going to break 30. Doesn't mean it has to happen. It just means that generally if the market's pressing higher like this, and we get up to this top, and we can't get through, and we start failing, even if it's that, you tend to attack the next higher low. Whether we just attack it and start to lift again, or whether we go straight through it and have a deeper correction. So that's putting more people on the sidelines. So it's all about fuel for a move. If you put more that go back on the sidelines, it could be the fuel to move back up. All right. And at the moment, at this stage, I wouldn't be buying this just yet. I mean, only because that's double top. We're just coming off that double top. We want to get a confirmation. I mean, if it lifts from here, there's potentially a trade on with a risk, through, was it buy through 34.5, with risk just below 33 or 32.5. If you can see what I'm talking about just here, because you've now drifted lower. So it's a bit of a choppy market. You started to find a bit of a base there. We've got through that level. So it's just the same thing as what we saw here is being reversed, and it's the same sort of thing. So now we're starting to lift. Now, if you take that lift in context of what's happening, just what we said here, it's probably not waiting till it retests 30. It's essentially starting to hold a higher level at 31.5, which is just drawn a different color. Here, that's your lows through here. It's holding a higher level. It's ever so slightly, but that there, if you say this is the move we're now looking at, you're buying the break, for instance, you got your risk down here. You're not taking a big risk, and you could be 2-to-1 if just with a retest that high. Even if we push through the high slightly, it could be a 3-to-1 trade. Not that I don't like the price section, though. I wouldn't take that, but I'm just saying that there is potential for that to lift up and test 38. All right, okay. Does that make sense? We'll just finish up on PET. I hope that makes sense, Pete. But anyway, I'm on the daily, just stepping back to the weekly. The weekly's in an uptrend, but this this price action is really choppy. And we saw it before. That's the beauty of it. You've had this rally, pull back, spike up to 30, straight back down to test that breakout, that support zone at 20, and then lifted and went even harder. So there's nothing to say that's just the nature of this chart. That's the nature of this stock. That's what it does. It could hold 30 and lift, retest. It could just flush that and then bang, up we go again. So there's a few different things you want to be taken into account, but it's all about risk. I mean, if you're wrong and you've got your risk sussed out, you're protecting yourself, then fine. Doesn't matter. You bought it 4 days ago. I see you bought off that low. That's fine. Well, nearly bought towards that high. But either way, there could be a bit of a grind up there, Pete, and you could be on the right side of it. It's just that the biggest problem is that daily is a bit extended here, and you only got as far as 34. Last time we extended, we're up at 38. Just be a bit, as long as you know where your risk is. I mean, that's all. Everything's about risk. We can all assess it slightly differently. And I'm going to be right, you're going to be wrong, and vice versa. You're going to be right, and I'm going to be wrong. But if we're all managing our risk, it doesn't matter. And if we're averaging 2 to 1 over 50%, it doesn't matter. It doesn't matter how you attack it. But as long as you can manage your risk properly and you can quantify your risk of where, according to your plan, according to your style, where your assessed is wrong, then that's the way it goes. That's all you need. Last one, we'll just take a quick look at PET. Fossil PET, that's heading south at the moment. What are you doing on this one, Vin? If you're still in, this could be just of what we said. It's taken a bit of a longer run up. So if we just start off with, we'll just look at the weekly. There's not much to look at there. It's taken off. It's done 3 million today, which is, and look at that volume. The volume that's come through, and it started probably slightly earlier. So let's say someone knew something when it started to lift onto the weekly. That volume that started coming in, stepping in here, stepping in here, stepping on the rallies, it just kept going. So that's quite good volume if you look at this weekly. Last time I had some volumes back in 2015, it didn't go anywhere. So if it gets volume and doesn't go anywhere, be a bit sus about that. But instead, we've got the volume that's picked up the last few months, and it's taken off. It's gone from basically 35 cents up to traded $1.50. So great. Nothing wrong with that. So when you get that kind of move, though, expect some heat to come out of it, and that's what you've got to be on guard for. So when you're looking at buying in those highs, you're basically expecting new buyers to just continue in after you. And don't forget, there's not a finite amount of buyers that are willing to jump in. It's always an infinite. Sorry, what do I talk about? There's not an infinite amount of people. There is always going to be a finite amount of people that are willing to jump in and buy it at higher levels. And that will, as soon as it's drained that supply for the move up, it's got to correct. It's got to put people back on the sidelines to re-engineer a new move. That's just the way the markets move. Doesn't matter if you're looking at FX, shares, commodities. It doesn't matter. It's all the same sort of principles. So, but if we look at this one, just go to this is a bit of that move you had one. Markets pressed up, started to find an offer at $1.50. We've had a bit of a pullback, went again, tried to go again, built your lower high. As soon as you get that, you're probably going to start attacking the most recent key levels, $1.10 a dollar, and it's done. It's just broken through. So now we're just trying to assess what it's doing here is really flushing out from this leg up. It's flushing out some buyers. So we're probably somewhere around 50% of that move up at the moment. Is this where buyers are going to start stepping in here? And if we look at what's happening, bit of volume here, that's okay. That's a positive that potentially we're going to start to find some buyers stepping in around 90 and slowing the pace of the move down and holding it for the next leg up, which is great. And the same with the stochastics. I don't mind when it's going from overbought and it's hovering down oversold. It's down at oversold, meaning that move down has been quite strong. And you're looking for when it's oversold or overbought, you're looking for the leg up or down starting to run out of steam, and you're just trying to assess it. So you're trying to add these things together. And what's my assessment of the overall action? So at the moment, we're just trying to figure out this leg up. Where do we, if we want to buy? It's chopped around here. It's essentially done this double top. Whoops. Done this lower high, and we're looking for this now I would personally be looking for it to, I want to see some more action play out over a bit of time, get my setup, and you want to see, because you can essentially, after a move down, you know that it's probably gonna bounce back quite hard. All right, but then there might be more sellers that come in, and then bang, then you find a higher low starts building, and sooner or later the volatility is going to come out, and it's going to be sort of those narrow moves. You come into the end of that move back, or the end of that contraction, and you're looking to try to buy it when it's going to expansion. I think these are the type of things you want. Narrow, the volatility is coming out, higher lows are holding, it's got a key level, sellers have done their job, sellers are moved away, they're out, they're gone, they moved on to something else, or there's enough selling that buyers are soaking it up, and they see that they're willing to step aside and let to see if the buyers can come in a bit more force, and they can get a better price if they want to sell. All these sorts of things come in when these sorts of things happen, and it's the same. We all go through the same process when we're trading, exactly the same process of when we analyze stuff, when we want to get out, get in, all that sort of thing. It's the same thing on sort of that on mass, I'd say. It's psychology of the trade. Um, when you get that volatility starting to squeeze, contract, come in, when you don't get these, big move down, like here we've got a big move up, big move down, big move up, big move down, smaller move up, meaning that sellers are starting to come in at a bit level, and then you've got a bigger move down, okay, expansion down. We want to see sellers disappear. We want to see buyers starting to come in, jump on the bid, jump in, and we want to see, I just ideally think, that kind of price action where you get time goes past, holds that level, starting to show signs that it's holding a higher level. Okay, we've got the squeeze we wanted. Enough buyers in here have been put back on the sidelines, because everyone in here is now, anyone that bought through here and still in, is underwater, basically above a buck, which is quite a few people. All right, and we just want to see now what's going to happen. Are they going to be lucky and the market starts to lift again, or is there going to be more pressure put on them? We just don't know yet. So that's all we're trying to do from here. That's all I would be doing on PET. So at the moment, too early for me to say what I would want to buy. Wouldn't want to sell it, because that, for me, this leg down is fairly extended. It's not the unknown, it's the known now. We all know it's going down. So now we're just trying to assess as who's willing to buy it. Is it a good stock? Is there a lot of people on the sidelines waiting that believe in it, are just waiting for their price to buy it, or is there nothing there? Okay, so that's it, guys. Before we call it a day, there any questions just before we take off? If there isn't, just shoot me through an email. So yeah, we'll call it a day there. Thanks for joining me. I hope you had a good day. We're only down 3.4 now, so we've bounced since we've been talking. Bounced back a bit on the ASX. We'll see how that closes. See what happens in the ASX. It's made back, so there's probably the last thing we want to look at. Price action on the ASX. That's quite good. It's gone from oversold to overbought. Instead of holding a major lower high and keep within that contraction, we've started to look like we're breaking out. So if we get a bit of rejection today, as if we finish in the green, we finish positive, that might not be a bad sign that we're going to lift and take out the high at 67.37, and we're going to go through 68. I just want to draw this up because I forgot about talking about the ASX. This is what we're looking at. We've got basically this is one leg up, bit of a flush here, bit of a pop up. So we don't know whether that's going to be a lower high coming to play. We're going to sell off. Then we sold off. Okay, then we started to lift. So this is your contraction. Okay, and we don't know who's winning out. But I would suggest after this, that look, it's still holding. It's probably still holding. If this can hold and we get up through this level, it's probably worth buying into, because you come off a higher low, we start to see a breakthrough that high, like I said, 67.37, would suggest that buyers are winning out and we're broken up and out of that contraction. We're going to start attacking new all-time highs. So just keep an eye on that, guys. I'll be watching that. Or we could just keep oscillating within this sort of contractive zone, holding higher levels, but we could be on the move down to 65. We start bouncing back to 67, back to 65.5, back to 66.5. We don't know. This all could take a long time. So we'll keep an eye on that, guys. Just see how it'd be interesting to see how it finishes today, whether it sells off into the close and the pros close it lower, or the pros are willing to hold it and close it in the green. Anyway, have a great day. We speaking. I'll see how we go tomorrow. Just watch out for an alert um, tomorrow morning. If anything adverse happens tonight, if there's a big move either way, we might just come up and do a morning talk at 9:45. Otherwise, we'll probably just give it a miss. All right, guys. Enjoy your day. We'll speak to you again soon. Bye.